And for more on business and finance news now, let's talk to Suzanne Haddan, who's the Managing Director at BFG Financial Services. Suzanne, good morning and thanks for joining Weekend Breakfast.
Oh, good morning, Eliza.
And of course, it's been a historic week in American politics. What's that done to the American market?
Well, the impeachment was certainly a major political event, but the eyes of the market have been more on the Biden administration and what they may do, which is very much around a strong recovery, which hopefully will be helped by the stimulus package that's been announced that Fauziah mentioned, but also a more stable foreign policy and hopefully better trade relations between US and China. And also President-elect Biden announced the accelerated vaccine program, which the market would like. But importantly, the market and the investors are very much looking at any downsides. And that one Fauziah mentioned was the likelihood of increased taxes on not only companies, but on high income earners. And that will weigh on the market and certainly took it off at its highs last week.
OK, so taking into account those factors that you just mentioned, are you optimistic about the US market as we push further into 2021?
Well, I am, but the stimulus that's been announced, not just in the US, but around the world, has to do its job. So we have to see jobs growth and we have to see the economy recovering. I think importantly, investors need to remember that this easy monetary policy, printing money around the world and being so accommodative, will not continue indefinitely. So my tip for investors is to make sure they're diversified and make sure they're disciplined with their investing for the long term, but be prepared for the inevitable correction or crash. Unfortunately, I don't know when that will occur. I'm just sure it will.
All right, well, we will be looking out for that. And tell us, what's fueling the buoyant Australian dollar?
Yes, it's been very strong over the 12 months against the US dollar, up over 12%. I think there's many elements, but two main ones. The first one is our very strong commodity prices. Look at iron ore, up over 80% for 12 months. Silver, 42%. Copper, 26%. And we're an exporting nation of resources. There's also been the impact of a weaker US dollar, and that's pushed ours up. Remembering we're not travelling overseas, so we're not going to get excited about the higher Australian dollar.
That's right.
In fact, the Reserve Bank would be somewhat disappointed because you may recall in November they dropped interest rates and have been buying back bonds, and they were hoping to keep the Aussie dollar low to help our exports, our broader exports. So they'll be disappointed with that.
OK, so the CBA put out a research note this week saying that the upbeat global economic outlook will support Chinese exports. To what extent do we still rely on China to keep our economy going here in Australia?
Oh my gosh, Eliza, we rely on them, as does most of the world. I mean, our exports, just over a third go to China, and again, mainly resources. But think about China. Last year, they will be one of the few large economies that have positive growth in their economy, may even hit 9%.
Wow.
Also, just in December, their exports around the world went up 18% compared to December 19. And why? Well, first of all, they were able to get the pandemic under control fairly quickly. And so their factories have been able to produce goods. Their export-orientated companies have been able to do their services and goods. And so they're so well positioned to take advantage of the global recovery. However, from an Australian perspective, you know they have been banning some of our exports. You think about coal. They're not letting our coal through their ports. But the pleasing issue is that coal demand was high by China and they accessed other markets, and that led to a bit of a shortage, and Australian coal could still be sold to other countries. So the fact that China is supporting global growth will help Australia directly by our exports to China and indirectly by booming the world economy and supporting our exports elsewhere. Thank goodness.
Yeah, that's right. Gosh, 9% growth in China. It seems a huge rate given the current circumstances. Suzanne Haddan, the Managing Director at BFG Financial Services, thank you very much for your time this morning.
Thank you.